Talk more about those record highs that Bob was just mentioning. Are we going to see more in the markets? Bill Nichols is with Bear Stearns. He says the market feels good and there are more all-time highs on the horizon. Peter Schiff is with Euro Pacific Capital. He says there may be nominal new highs, but he's bearish on the market in real terms. Gentlemen, thanks for being here. Peter, I want to start right there. So if you're bearish in real terms, but you still think nominal new highs are coming, to me that tells me you still think the market's going higher.
Well, it could go higher in nominal terms, but it means nothing to investors who
well,
live
wait a minute.
in the real
Why does
world
it mean
and
nothing? What does it mean nothing to investors if the stock market is at one level today and in 3 weeks it's higher?
Well, because if the cost of living is rising more rapidly than the value of stocks or the dividends that they pay, investors are growing poorer despite the fact that nominal prices are rising.
So where should they invest
instead? And that's what people have to understand. Well, they could invest in assets that are doing a lot better than the U.S. market. They can invest abroad, like we're doing at Euro Pacific Capital. They can be out of the U.S. dollar, which I think is in grave danger of a major decline. And they can invest in commodities. You're talking about crude oil, precious metals. There are other things that are doing a lot better than the U.S. market, have been doing better than the U.S. markets for the last 6 or 7 years. And I know we're getting these inflation numbers tomorrow, the CPI numbers. But people have to understand those numbers are meaningless. I mean, they mean something to traders and they mean something to journalists. But as far as long-term investors, they're worthless. They really represent the government's version of inflation, what they want us to believe inflation is.
And you may be giving journalists too much credit on that one there. Bill, let me ask you, do you agree with his philosophy on what you should be doing with your money here?
Well, I think you have to look at where we've come from. I mean, from June till now in the S&P, you're up 14%. So by any metric, that's a nice move on the upside. Sure. I think there are still some concerns on the inflationary front, and what is real growth. I think that's a good issue, and you may see in the short term with this big rally. You haven't seen any pullbacks of any real note. Down 4% is the biggest down move over that 5-month rally. You may get a little bit of a cautionary pullback, but I think the path of least resistance short term is still the upside.
And so, what does that mean? Does that mean I hear what? The old phrase, cautious optimism. And are you putting money to work here, Bill, or aren't you?
Well, I think it depends on what sector. Right? I think telecom has come particularly far, particularly fast. There's some issues today with some government officials looking into that space, so we'll see. That may see cause for a little bit of a pullback. Technology seems like it's got the bit in its teeth and looks like you have a little more upside in the short term in that space.
Peter, you've mentioned some things that you don't like. You don't like the dollar, and you're suggesting that people be more exposed overseas. Are there certain sectors, though, here in the United States that you are willing to invest in?
Well, I've been in the energy sector, I've been in the mining sector for years, and some of the export-related companies, but overall, the broad averages, and even though I said it looks like the market could make nominal new highs from here, don't expect it to last. I do expect the market to start turning down, and turn down rather sharply. Next year we're headed for a recession. That's not priced into the market. I think it's going to be a severe recession. It's not going to last for quarters. It's going to last for years. And that's not going to be a good environment for stocks. Also, rates are headed higher despite the recession, and you're going to see continued upward pressure on consumer prices.
Bill, do you see that kind of outlook for the markets, especially when we're talking about unemployment below 5% here?
I am not that cautious. I think that if you do see that with the economy slowing significantly, I think the Fed will be very vigilant and will be cutting rates into that type of scenario.
All righty, gentlemen.
Yeah, unemployment's going to pick up quite a bit, and unfortunately the Fed's not going to be able to cut rates. Foreigners will not let them do that. Rates are going to go up, despite the fact that the economy is moving into recession, and it's just going to exacerbate it.
And with that, Peter, you get the last word. Gentlemen, thank you. We appreciate it. Bill and Peter weighing in there. Liz.